Hello and welcome to Core Finance. It is the 1st of November. I'm Matt Brown, Senior Market Analyst at Oanda, and we're going to talk about the euro. We've got three charts today, and we're going to look at the euro versus three other currencies. Starting off with euro sterling, all in play at the moment with Brexit negotiations. A lot going on, obviously, ECB, Bank of England, etc. But from a technical point of view, what's going on? Where can we go?
Well, fortunately, they're all supporting, all the charts which you'll see are supporting the general view that the euro was overstretched leading into the ECB. The ECB announcement was completely in line with what we were expecting, with a dovish slant. So barring any significant change in the data that's going to suggest to people that interest rates are going to rise sooner after the end of quantitative easing, I think there's plenty of prospect for the euro to correct its previous rally more. Now there's some key technical tests, which is what I'm highlighting in these videos. This one in euro sterling is just quite interesting. It's around the 87.70s, 87.50s. As you can see, from July onwards, this is a major zone of support. You've also got the 200 and 233-day simple moving average band coming into play. So I think a break at this level could be quite a bearish signal. And we've had a few technical plays on this one, which is just quite nice. We saw the break of the trend line, which is typically a bearish signal. That's followed through quite nicely. We rallied back to the 50 fib, and that held quite strongly with the 55.89 moving average band. We had a second test of that, which actually created a double top in the shorter term throughout October, and then we had the break of that neckline during the ECB meeting last week, and since then we've actually had that move pretty much complete, and now we've got the next test of this support, and I think, like I say, a break of that and things start to look pretty bearish once again for this currency. Now, of course, these currencies come in twos, and the pound I wouldn't say is particularly bullish. I think a rate hike this week from the Bank of England's pretty much priced in. But I think the euro weakness could still drive this pair lower, and the next zone of support is around the 86.50s, but don't be surprised to see that just the first level of support on a broader downside move.
Understood. Looking at the euro-yen, currency pair I quite like. A lot going on, a lot of moving parts in this, but from a technical point of view, is it a bearish euro?
Yeah, or at least we're waiting for that confirmation. But given what's happening elsewhere, I think that we are poised for some downside, and we're just waiting for some confirmations. We've had, again, a nice technical setup. We had a break of the rising trend lines. We had a retest of the previous highs, and it found resistance around those levels. It remained below the trend lines, which is always important. You've got that very, very clear zone of support around 130, 150 through 132. You can see that's been an important zone of support really for the last month or so, tested on numerous occasions. So it means that if we get the eventual break, it makes that much more of a significant break because of how many times it's held so far, how many times it's been seen as a buying opportunity in the markets. The fact that that zone comes around the 55.89 moving average band, the fact that it comes on the Ichimoku cloud will make that break all the more significant. So when and if we see a break of the kind of 131s to 131.50s, then I think that could be a very notable signal, bearish signal. And the fact that that would also take out the double top neckline as well gives us an idea of the possible price projection we can see in the short to medium term, which interestingly takes us back to the prior zone of support around the kind of 128 to 128.50. So we could see a nice move in the short term, but I think beyond that, I think there is potential for a broader correction as well.
Understood, yeah. If it breaks, get the trade on and obviously look at those levels there. And finally, looking at the old favourite, euro-dollar, yeah, technically it doesn't feel very positive as well for this one.
No, it's always nice when the analysis lines up. I think in previous videos we've talked about the head and shoulders which formed at the top in September, the smaller one. That move's pretty much been completed now, I think, back to 116. The breakthrough last Thursday actually broke the neckline of a bigger head and shoulders which is formed since August. So that's the more interesting one, because that is the one that really points to much more downside ahead. From a conservative aspect, just using the textbook projections, the shoulder to the neckline projected lower, that could take us back towards the kind of 114.50s, 114.75s, again coinciding with previous support. But I wouldn't be surprised to see a broader correction again. And when you take the projection from the head to the neckline projected lower, that would suggest we're looking back more towards the 112s, 113s. And I think that's a very feasible correction, and especially in keeping what I've said now. It seems I'm repeating myself a lot in previous videos. I do think the dollar has the potential to have a positive end to the year, so that could be a key driver in this pair more so than in the others, where the yen, it's more of a euro story. Euro pound, it's more of a euro story. In this case, we're seeing both weak euro and the potential for a stronger dollar into the end of the year. So I think this one is looking particularly bearish at the moment.
Understood. That's the standout trade potentially there. Well, I'm sure the ECB would be quite happy to see the euro a little bit lower, and certainly if you are short the euro. But in the meantime, Craig, thank you very much for joining us here today.
Thank you.